Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. Got a pretty active day. I'm going to try to get into it right away. This stream's about... One second. All right. This stream is about integrating Bookmap OrderFlow tools with auction market theory using a volume profile in the intraday developing time frame. It is about building out the business of trading. Understand that trading can be a career if you approach it as a business, and use a potential process to build the business. Trading, in my opinion and my experience, is really a statistically based business. It is about probabilities of one thing happening over the other and accepting that you are in a random environment, that every moment is uncertain. And in an uncertain environment, the only thing that I have found that gives us an opportunity to participate in randomness is to operate with a statistical edge. This is based on the premise that Las Vegas, which has a model, a gaming model, which is extremely successful, is built the same way. They play games that have a statistical edge. They accept that the cards coming out of the deck for those games is random, and the way the gamblers or the other participants play their cards as random. So they are in a completely uncertain environment. However, unlike us, they use something called anchored inputs. That means the games are played exactly the same way, because the only control they have is over how they play the game. We are in the same business, and our games, if you will, if we're using that as a business model, are structured trades, or as you think of them as setups. Now, most retail traders use a variety of inputs or mix and match inputs and time frames, and the random inputs create something that is not measurable. If you can't measure it, then it is as random as the random behavior of the participants. And randomness times randomness does not create edge. It creates, let's just say, potentially chaos. So if garbage in, garbage out, you've heard of that term? Well, random in, random out just creates more randomness in an exponential basis. So the Trader Lab is built on the idea that if we can extrapolate and only interact with the gamblers or the other participants when we have a statistical edge over time, just like the casinos, assuming we can master our emotional states, the fear, the uncertainty, and all the things that are obstacles to operating in that environment, that maybe over time we can develop the skills to actually have a career or a business based on the reality of this business. And again, it's just a personal opinion, but I'm going on 45 years in this business, and that might have some value. I don't know. What do you think? And by the way, the Trader Lab is a community of like-minded traders that have come together to leverage their collective experience, and there is no cost to visit the Trader Lab. There's a library of webinars and a terrific community, which I'm going to show you a little bit of that, and then we'll get into the trade today. General disclosure: all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is based on structured trades that are available to all of you in the Bookmap Discord Trader Lab community. There is a link in the bottom of YouTube. if you want to avail yourself of that, and there is no cost. Now, I posted this at around 7:55 a.m. I just want to show you this because this is what goes on in the Trader Lab. By the way, look at all this that's in Trader Lab. The Trader Lab is a community of serious traders. It is not romper room. It is not the walk on water. There's some guru with the simple thing. It's not simple, but it can be broken down into chunks that are can be learned. And then it's intentional practice and understanding market mechanics and using a high-tier order flow tool like Bookmap to see inside participant behavior. It's about creating edge. And remember, what is edge? That's how the casinos operate. They only get involved when they have an edge. So let's get back here. This is 7:14 a.m. So let me come further along here. Okay. Guys, be aware of the stops of fuel above us, and there's a microcomposite high volume node 5540. Yesterday's ETH high was 5534, a previous microcomposite volume point of control. That is meaningful. That means yesterday, maybe we were getting stretched out, but it was still vulnerable. We are opening potentially above the microcomposite, and I'll show you all these, and the naked volume point of control. Microcomposite migrated gradually higher. It might be suggesting a potential squeeze. Now, this is at 7:55 this morning Central Time. To the upside, squeeze to the upside. While anything can happen, there are signs that the upside and the shorts might get squeezed soon. Not a recommendation. It's just part of anticipating behavior. How, if, and when it happens is random. Now, I'm going to show you this. I posted it this morning. You're going to see how it relates to today. And again, if you're visiting in YouTube, and even if you're a Trader Lab participant, thanks so much for being part of Trader Lab. So let's go take a look at some of this stuff. Now, I'm going to take you to that chart. Now, I want to show you this. This is called a microcomposite, and all it is a volume profile drawn over a consolidation. So we had this consolidation over here, and we gapped under here, if you remember, and broke out of it. Now, this is the 5540 as a potential target to the upside if we squeeze these shorts out. So I was looking for, and we held this level yesterday. So yesterday's low, 54.80. This is 54.65. And I mentioned this yesterday. This is our target for yesterday, today, and who knows when. By the way, we have further targets down below in case. We have buy stops up here. So we're kind of bracketed, 55.40. And the reason is there's buy stops here, and we can go up into these stops and then tag this and still go lower. So that's what I was referring to this morning. And then the 65 is our target for today and or lower. We don't predict. The goal in the Trader Lab is to understand market mechanics, how the market works, why it might do some of the things it does, and then how you might get in alignment with it. And this is based on structured trades. Please give a thumb up in YouTube if you find this interesting. Now, let me try to get back into this over here. One moment, please. So we're back at our 65, I see in the current market, but I'm going to go into the open. Now, a couple of things. We opened higher inside of yesterday's range. Grab your pen and paper. I'm going to give you just a couple of handful of statistics. There is a 80, and you have to vet all these for yourself. Past performance, not necessarily indicative of future results. This is the RTH open, and we're just starting at 8:30 Central Time RTH. This is the overnight volume point of control. In profile world, basically what a volume profile is a shopping experience. And volume shows interest. Where volume dries up either at the high or the low of anything, means, and you'll see the volume taper, a price is either getting too high when there's less buyers. Think of the store, where if a price is too high, you don't buy it. Some do, most won't. If the sellers want to sell something, the price has to go lower. If it gets too low, the volume dries up on the downside because the sellers aren't willing to sell it. And then if the buyers want to buy the product, they're going to have to pay more than when it was on sale. And then where most of the volume takes place, the high volume is like a retail price. So if we open above the most recent auction, which was the ETH, then we're looking possibly for it to check this price. Is this too low? And remember, where's our stops? Yesterday's high, okay? And what's above also yesterday's high? This also, 32. So we got a couple of things, and we have, hold on. And this, the settlement, and yesterday's naked volume point of control. So let me kind of put it in perspective. Retail from the ETH, yesterday's high. There's buy stops above yesterday's high. This is the retail price from yesterday where the most volume was, and that has, just to keep you going, a 67% probability of getting tagged. And of course, nobody knows who, what, when, where, part of the joy. And yesterday's settlement, and where is that one? It's about a 69% probability. So 82% probability. This has a probability. I won't bother with that one. Here, here, and here. So these are primary targets. And then we have the long ball at 65. Yesterday's low is also doable naturally, and this is the target coming down. And you could see we just tagged it, and I don't know if if we get below it, then we can continue down into here. Not a recommendation, just saying. And don't forget FOMC tomorrow. Now, and don't forget we had the JOLTS jobs report, kind of important, consumer confidence, very important stuff, 9 Central Time. So what might we get? So let's look. Everybody with me. And by the way, if you're in YouTube, please put a thumb up down in the bottom. Helps the stream. Appreciate you visiting the Trader Lab. Remember, there's a link in the bottom of YouTube if you're interested in visiting Trader Lab and joining a community. And there's a lot of additional education available at no cost, stocks, options, crypto, OrderFlow with a high tier tool like Bookmap, options, swing trading, algorithmic behavior, market maker behavior, and a lot more. And a lot of additional streamers and, things like that. Good stuff. Bookmap is one of the only firms I know that not only has created a top-tier order flow tool, but also invests in traders. Typically, think of what you've invested over the years. Well, Bookmap's also making an investment in you. So the Trader Lab is a no-cost community, and the idea of Trader Lab is to help you build the business. If that's your goal, you might want to visit Trader Lab. So RTH open. Now, here's what I'm thinking. What am I thinking? By the way, I wanted to mention this to you because there's so many things. When I think about the morning, in other words, what's going to happen, I put my levels on my chart. I also write down two possible scenarios. In other words, if the market goes down first, that it can go up and squeeze the shorts and then continue down. The other scenario was go up first and then go down. And you're going to say, well, this is pretty smart. Well, it's just a matter of which side takes control. So my first trade, and I'm going to show you my first trade, which was a short, and it did not succeed. Close, but no cigar. This is trading. And if you think I don't take stops or anybody who has the magic, whatever it is, not so much. If you've been doing this for a while, there isn't any magic eight. Well, we have the magic 8-ball, but not necessarily a solution. So this is the RTH open. So let's look at the order flow. Let's try, and this is a bracketing algo, so we ignore that. I ignore it. I'll just dim it for you. So I see sellers. Now this is buy delta. These are selling iceberg. So I see my sellers. I see buy stops. This is called right here. I label these. You see me do this every day. The reason I do what I do for you is to let you see consistency in a random environment. Remember how the casinos operate. They operate consistently in a random environment. And in our world, everything is uncertain all the time. So that triggers us emotionally because we're wired to avoid uncertainty. Like, saber-toothed tiger, let's go the other way. Well, if we're in a condition of risk and our body or our emotions are triggered because we're in a continual, anytime we put a trade on, or anticipate a trade, we're in a condition of risk. So let's look at this. So right here, and I'm looking, remember, I have two possibilities. I can go up and squeeze, or I can go down and then squeeze. So right here, I see this. Now let me show you this trade. So this is retail, and when we start, when the market opens, this is the developing volume point of control. And what it is really where the retail price is. If the market moves away from it and then it pauses, now there's more volume here than there. That's what creates this. So right here, I'm looking and I see the buyer. Now right here, I have no clue. I always claim to be clueless, and it's the most truthful thing I can say, because clueless is I'm open, I anticipate, I can't predict. So I stay in a state of maybe. So what do I know? This was too low. This now is retail. Think of this like shopping. These consolidations are shopping. That's what it is. It's like a store. So if the buyers exhaust here, and I don't know that until I break below it. So then what this is, it's rejected. Now the first place where there was buy volume was here, and they absorb these sellers, these icebergs. I break below it. This now becomes resistance. This is resistance. I break, I pull back. Now, this is my target right here. Right here. I'm trying to remember where I took this. Hold on a second. Guys, I got to see where I took the short. It seems I actually took it better than I can show it to you. I just can't stand stuff like this, Hold on. 55, 8:30 and 24 seconds. Oh, no wonder. Oh, here it is. So I took a short here. And my target is this, okay? Now, here, so my target is here because I'm thinking at this point, and I had this here, okay? So I'm looking at this and I'm going, well, that's my opening swing low, maybe. And I have a structured trade here. So I took the short. I'm also below the VWAP. I tested the mid. I'm feeling reasonably good about it, and I'm going for this, okay? Because that has an 82% probability. And I got taken out of the trade, okay? So, it's just the way it works. So I ended up getting a scale by the skin of my teeth. I'm going then I got scaled in here. And then I'm going for this. And then I'm looking for 65. I'm sorry, not 65, 05. So this was my target on the short. So I was lucky I got scaled and I got stopped. Basically, it was a scratch. And the broker sends me a gift basket. So then I go, oh, okay. Now this is too low. Let's label it. So I'm not going to be able to look back at my actual trades. This one I didn't remember where I got in it. But once I cross above here, now this becomes a long, because this is my resistance. Watch. Pull back the mid, VWAP. I have this. So I get long against here, and you've got this. These are variable high volume nodes, and this one is right there. Okay, so it's there, and then I have my mid. I come down to this is resistance, becomes support. This is resistance, becomes support. This is resistance, becomes support. I get my sellers right here. I see absorption. I see the break high. I pull back. This is also along in the Trader Lab. VPOC migration, still suggesting higher. Yesterday's high, target. Now, trade management. Let's talk about that. By the way, if you have questions, post them. I'll do my best, as the saying goes. I'm going to show you structure. If you want to see it, I'll show you microstructure, because I'm going to show you how I manage a trade. I'm not saying it's a good way to manage a trade. I'm just saying it's a way to manage a trade. You know, it's all fractal and time frame. Yeah, good morning. By the way, if you're in YouTube, there's down at the bottom, there's a thumb. It really helps, thumb up, helps the stream so that you guys can find it. Remember, these streams are exclusive to the Bookmap Discord Trader Lab community. They're available for 24 hours to reverse engineer, screenshot, and work on your structured trades. Remember, the behavior is random. So I'm going to show you the trade management now. Now, what I'm showing you is a function of fractal. What is a fractal? A fractal is my way of, it's like a Russian doll. You know how the nesting dolls, how they fit inside each other, they're all exactly the same. That's how you guys describe time frames. And I just found, after doing this for a long time, I use time like everybody else, 15 minutes, you know, all that. Try to see intermediate time frames, 60s, 30s, and of course we all use RTH. But what happens here? This is not clock-based. This is participant-based, and we can see the participants in the order flow. So am I going to wait in a rigid fashion for something that is dynamic in real time based on the interaction of participants, and something has to happen on a clock? The clock has nothing to do with this other than the RTH open, maybe EU, you know, some of that. So I found, for me, I don't use the clock. I'm looking right here. What do I see here? As an example, what happened here? Well, let me even go a little further. What happened here? If this is the retail price and I have no buyers here, I come down, I get a seller, I get a buyer. We break high. These guys were absorbed and the buyers took over here. And we squeezed out, just giving an example, the sellers that were here. I pull back. The buyers have taken over here. These sellers are under the bus. Buyers got absorbed here. There's the iceberg. So I can narrate this. Now, I can't predict, so let's not think about prediction. If you're thinking about knowing, you're not going to ever know. So that's what most of us want, certainty. So we'll spend our developing careers trying to build certainty where it doesn't exist. And most retail traders, because of the randomness of this thing, you could throw a dart at a board or flip a coin, and you're going to have winning trades. And that is, I think, what undoes most retail traders is they embark on the quest to make what works randomly better. And it's very logical. I did it for years. Look how well this thing works. Maybe I can make it better. Tune, tweak, throw the kitchen sink at it, you know, whatever it is. And then go back and look and see if it worked better, and then anticipate next time it'll do the same. Of course, the market's different every day and every moment. So here's your buyers. I see a seller there. That's absorption. Buyer, buyer, seller, buyer. Looks like it's going higher. It breaks low. This was absorbed right here. So I have my sellers here, my sellers here. But where was my buyers? Here. This is support. And that's support. All depends what you want to use. Come down and test. Let's watch. So I have a seller here. I got a buyer there. When the buyers, right here, you see the selling iceberg. So with an order flow tool like Bookmap, I'm watching to see the reaction. Now, because we don't know. why, when this seller interacted with this buyer, did we not rotate down, you ask? And I'm going to ask you, I'm going to tell you, I don't know until I see the next behavior. Then what this shows me is, even though they're selling here, the buyers still have an appetite and are consuming the sellers. Buy stops, by the way, see them? So now I go higher. My sellers are here, absorption, and I have more buy stops, and my buyers are absorbing the sellers. So sellers were absorbed there, sellers are absorbed here. Now, who knows? Buyer here going higher. Right here, I see my seller, and if I get above them, looking good. More buy stops. Now I get a rotation here. Well, I know my sellers were here, but I know my buyers were here. So I know. So now the thing with this is, how close do you manage? Is it here? Or is it here? Or is it here? This is where you, and the thing is, it's all random. So it's over a large sample size. This is the work in trading, is that you can't say, oh, I'm always going to do, today I would have done this, yesterday I did that. That's not measurable. It's over a large sample size. Or, here's the or, you stay far away, and that's a decision you have to make, and you only get the answers through vetting or doing the work and extracting statistics. Remember how the casinos work. It's a statistically based business. So is trading. So if I come down here and I see no seller, and these buyers are absorbing, when you see nothing, and what do we see? Icebergs, sell stops. They're taking the other side. Buyers were here, and we got above them. So any sellers in here were absorbed. We come down, there's nada going on here. Right here is resistance. I have no buying above here. I see my sellers. Right here is now support, sellers here. I break above. These sellers were absorbed. My stop can stay here. Or when I break high, right here, I see my sellers absorbing the buyers. Iceberg. I see my sellers here. Uh-oh. Break high. What does this tell me? Too low? Too low. Why? Buyers. There's seller there and a seller there. We take them out. Going to the moon, Alice. Let's watch. So, going up. Stop here. Here. Going up. I see a seller. Now what? Looking for it to continue, wouldn't you? I did. What do I know? I don't know. I see a buyer here. Now these buyers need to stay above here and need to get above this. So right now, any reason to think it won't? Break low, come back. Right here, this is where my buyers got trapped. And we got this guy here too, and the sellers were trapped here. So this is really the last hurrah for the long. So I got taken out. That's that. Okay. Now it's like, now what? Any questions? So anyway, that was the longs. First short, then long. Wow, we're still going south. That short off the naked VPOC was pretty nice, guys. That's off 65. We had a long off 65, which I'll talk about if we get to it, and then a short off the 65. So that's all pretty cool. So, and then let's go a little further now. Do you have questions? Please post them. So this now, we return to the volume point of control, and we start doing one of these numbers, And we have the report, Consumer Confidence Big Report, and the JOLTS, 9 Central Time, which is coming up. So I'm looking at this, and I'm going, well, longs coming out. We took out yesterday's high where the buy stops were, and now I'm thinking shorts. However, and this is part of the joy of all this, are we going to go rotation? And remember, I have this open, 82% probability. So, and I'm coming back around, So, right here, we break below this, chop, 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 chop. So I'm below mid, I'm below VWAP. I already took out yesterday's high, 82% probability we go here. And I'm looking at this. So buyers are here, break, sellers in control. I come back to mid and VWAP. I've got the buyers here. I'm under the opening swing. Remember, first thing in the morning, I was going for this, not so much, right? Missed it by a hair. It's still a valid statistic. So it's a short. I'm looking for shorts. So these are all shorts in TraderLab. This VPOC migration is a short here. So these are shorts. These are shorts. If it's in your plan, this is an outside edge out here. You see this? This is called the distribution. When this breaks, this puts you really on notice that everything above is too high potentially. This is a continuation short if it's in your plan and your stomach lining can handle it. This is the so I was taking shorts in here to here and then managing the trade. And I posted in TraderLab. We have the report at 9 a.m. So what I did is I got scaled and I put my stop out above here. And the idea was that and ride the report, because it's either going to be a nice thing or not so much. And then my target becomes 55.05. So this was my target. So that was the next trade for me. I'm only showing these are structured trades in TraderLab. Now, this is part of the joy. At 9 a.m., we have something called the IB30. The IB30 suggests there's a probability, and don't forget, we got the settlement, naked volume, point of control. Let me give you the stats again so you remember how I trade. Not saying it's good, just saying it's a way to aim the barge. There's a 69% probability that we're going to get to the previous settlement right there. And that's why I trade with statistics, because I have no idea, of course. Nobody does. And the naked volume point of control, where is this? 67%. So I was trading 82% probability to get there. That was my scale. Go into the report. If you don't get blasted, which is part of trading, you get scratch, and you're willing. Am I willing to bet a scratch after getting my scale statistically there on a pullback? And if the report's not favorable for my position, then pop. FOMC is tomorrow. You might get, since we squeezed out the shorts, the weak shorts, now we're going down. Okay, that sets up, to me, you want to be short. And then the next target was here. So that was that, okay? And here. Now, based on breaking the 9 a.m. low, this becomes the first hour low, and there's over a 90% probability, past performance not indicative of future results, that we're going to take this out, maybe. And the term maybe is a big part of this. So let's look. Where's the next trade? Pull back to the mid. And let me show you another little piece, a little more advanced, but you might appreciate this. What was too low? There. Remember this? Variable high volume node. And this was the short I was on, and I got a scale, and then I got, made my contribution. And this is too low. Think of this like, and the longs were here, once we broke above them. You can see the structure going up. If we take the same concept and we think of this more like support and resistance, if this was support, it was too low, what becomes, and this is retail. So if I break down after all this stuff, watch. Remember where this is, right here. Overnight volume point of control. Break high. report. Now this is here, right? And I have another one here, and I got the mid and the VWAP. So I'm thinking I got to get short again. I pull back here. There's the report. Let's watch. Where do I come? So now I'm below here. I'm below here. And this is called the low volume node. I just want you to keep an eye on it. So these are areas. So if this was too low, it might become too high. And then I know I've got the mid and the VWAP. I also know I have a variable high volume node. Let's just look at this. This is another short, and I'm going to go for this. And whatever. Let's just watch. Micro high volume structure here. This is a little more advanced. Variable high volume node, mid. I have alignment. I break. This is a test. This is a Trader Lab trigger. If you didn't get there, you have this. Trigger, stop here. You go for risk neutral. Down here is your volume. You see this little node down here? Let me just throw a little line on here for you. That high volume there. And it's back in alignment with this. Here's the possibilities. Too low, too high, too high. What about this? Maybe stale. Back here. Over 90% probability I take this out. That's a short. It's a structured trade. Look where we come. This is your scale. Now, you hold. We have another trade in the Trader Lab. So you're holding. Now for me, there's another trade in here. There's two possible trades here. One is called the IBF, which is a mean reversion trade. However, let me give you the however. This is too high. Took out the stops above yesterday's high. We're below this and this, which are important high volume locations in the intermediate time frame. And this right here is the IB, and it breaks right at 9:30. So now, and there's absorption. So this tells me a couple of things. We can come back inside and test, and this is, that's an extended resistance, or this, which was, remember where this came from? I think I should draw a different kind of box here so I don't forget. But this is too high. And here, let me see if I can do this for you guys. Yeah. Let me show you this. It was here. I want to show you this so you can kind of see kind of how structure is created in the auction. So all this is a consolidation. Actually, hold on. It would be nice if I could actually grab it. Oh, there you go. All right, come on. When you think there'd be an easier way, right? Why should anything be easy? They're a little hard to grab if you notice. All right, enough of that. It was a valid attempt. So let's see if we can see it this way. Here's the outside edge of this consolidation. Notice where we come up. Notice where the high volume is. This is resistance. It's an outside edge right there. It's called a low volume node. It's created by this. We break high, and the urgency leaves the low volume. Now it's support. See it? This one up here is resistance. I'm just going to try to do this real fast. See it? So here's what you get. This is support. We break. This is resistance. We break. We come down to support. We hold. We come back to resistance, but we want to be short. We come back to this. Is everybody with me? You see kind of how this is working? And now this is a short. So, you could be scaling here. You sell that, you scale here. You come back, you sell there. Or you manage your trade above this. You come back here. It is support. Let's watch. And we have our stat at 930. I break below right here. Now we want to look at a place to get short. If we're not, I come inside. Now this sets up a dilemma. It's called the IBF. The IBF is a mean reversion trade. So potentially we can come across the range. So a couple ways to think of this. We have two trades, and I'm going to tell you that, it can be confusing. So where's support? It is here. Where's the IB? Here. What is too high? There and there. Where do I come back? If I'd extended this thing instead of trying to fiddle with it, see where this line is up here? So support, let me try it this way. I'm going to try it just a little different here. Okay. So let's pretend this box is extended. Support, resistance, support, resistance, break low, no IB set. So this is resistance, resistance. I come up here. This now is support, microstructure. You could see it there. I just try to put these things on here real fast for you. I just want you to see a way to kind of read it. So we are using order flow. See the chop, chop, chop? There's the buyer. They're trapped. Sellers take over. Come back and test the microstructure. The micro in this fractal is here. This is based on what happened here. Break high, support. Support becomes resistance. Break low, resistance. You see? Break low, this is resistance. Go down into the fractal, same thing in micro. This little high volume node there is the same as this, but it's that Russian doll. I'm going down. There's my seller. There's my test. If depending on your thing or your time frame, these are shorts. Stops are here. It's all up to you. Let's just watch. Buyers come back in here. Now, 930 is this thing, and there's over 90% probability that'll get taken out. So let's just watch the yellow brick road. This is the last place my buyers got stuck. This is absorption. Sellers in control. So this is where my buyers are in trouble. Look, I'm going to try another little drawing. Now, I take my time because if you can see order flow and then put together what it means. This is what it means. It's not, and I don't use indicators. What's my indicator? It's strictly volume and order flow. So I put this together so I can see structure. Now I'm doing this in my head, but how do you learn a foreign language? So you have this absorption, which you don't know until you see the seller take over. Come back. These guys were absorbed. That means the sellers are active here. Where's my buyers? Sellers are here. Where's my buyers? Sellers in control. Buyers take a shot here. This is like a shootout at the OK Corral. Where were my buyers stuck? Here. Notice the symmetry. I come back here. I see absorption there. These buyers are being absorbed. They're selling icebergs. Stop an iceberg detector. Very important. So I can see the absorption, but now I see who's on the other side and I see the buy stops. So often what's happening is if shorts are getting squeezed, the icebergs are going to take the other side because the buy stops are buyers and they're sitting there with their limits or their market orders and they're showing, we'd see them. But I know based on order flow, These guys are on the hook. So let's come back to the symmetry. Buyers on the hook. Buyers on the hook. Break. Pullback. Where's my buyer? Not so much. Selling iceberg. Break. Where's my microstructure? Let's move down in fractal. You can see it there. You see, guys, how I'm doing this? So let's watch. IB. Over 90% probability. Past performance not indicative of future results. Now, what I was doing with this, I'm just going to say, overnight mid. Let's give you that statistic. And again, you've got to vet everything for yourselves. Where to go? 72% probability. Lovely. And let's watch. What's this? IB. We have another structured trade called the IB continuation trade in the Trader Lab. What is it? Well, we know that's resistance, and we know this is resistance. We know this was the retail price from yesterday, and we're below it. We're below settlement, and we're outside of this, the first hour's low, which had a high probability. If we come back up in here, we have what do we have below, you ask? Yesterday's low. What's under here? Stops. And this was a target from yesterday. Luck of the draw. What are you going to do? What's our next target? 65. So let's watch. This is called the IB continuation trade. Microstructure right here. There's the high volume node. I'm not going to keep, well, I'll throw it up here so you can see it. I hope this is useful for you guys. Whoop, get over here. So this is where the buyers got absorbed. This is the location. This is a short, the Trader Lab. This is a short in the Trader Lab. This is where the buyers were absorbed, right there. Your stop could be up here. This is where your teeth chatter. Stop is up here. Sellers take control. So you have absorption here. There's a seller up here. Seller. We come back. This is kind of like the fight, you see? And then we get here. Are we going to take this out? When I'm sitting here, the teeth chatter and my brain is going on, you know what we do, right? Well, I see the buyers here. Where's my buyer? Seller here. So I know this might be still too high. We'll take this out. Watch. I think I'm going to get caught up here. And this was my target. This. So I exited a little bit ahead. Now right here, I got out. Now this sets up a long. Now this one worked to a point. Here, I'll show it to you. So I'm out. Now this is a counter trend trade, and and here's why this trade. This was the target and the potential. And if you remember from the stream yesterday and today, what I showed you on the chart hadn't changed. This was 65 was our outside target. Who knows, right? Part of the joy. So that's why it was my exit. But I can anticipate, and let's come back to concept. If this is the retail price and we were testing it in the morning and it was too low, I can go up and squeeze. If I get below it and it becomes too high, I can go here and test it. Remember, target coming down and settlement, statistically valid. This one, overnight mid, about a 72% probability. If I get under here, it sets up a continuation trade down to here. If this becomes too low, I can come back up into here someplace. So it was a long for me. Now there's part of me that goes, yeah, crazy, and the other part goes, it's your job. You know, you choose to be a trader, you trade. You leave your emotions and everything out of it, because on my best day, it's just random anyway. So I'm going to show you the long. Now, I don't turn around quickly. So when I get out of a short, I kind of dust myself off, make sure I don't have any orders laying around out there, which has happened to me in the past. Like everything that happens to all of us happens to me too. So let's look at the microstructure. So right here, okay, so this is my target. I see my sellers, and as far as I know, it's going to zero, right? What happens here? Right there, I'm going to put a little line on the chart so you can see it. This right here is micro high volume. I break high. So now I'm looking at this and I'm going, and this is a long for me. And I'm going, well, where might this thing go? Well, we might come back and test yesterday's low. So this is my trade. I'm going, well, and I posted this in TraderLab. I don't call trades, but I say, maybe, because maybe's the best you got. So I have this is too low, and now I have this consolidation here. I'm going to label it. Now, so I'm looking at this. I got volume here. I got this, and I'm looking out here. So let's look at it. Notice where I'm holding. So I have this, it got away. I see the buyers. Now I have another chop, chop, chop. Remember what this was, right? So we have volume here, sellers. So these guys are short, of course, and they're on the hook. Down here is absorption, icebergs, whatever. And I see a change. See the buyer? So now I'm looking at this, too low, and it's a long, don't forget. So I'm going, wow, I think I want to get long. But if I get long, my stop needs to be under here. So that disturbs me, but I'm looking at the risk reward. This could be a nice trade. So I take the long right there on these tests. So in here, actually. So I get long and I get scaled. And then I'm holding and I'm going for this, because it would not be unusual or unreasonable to come back and check yesterday's range. And then if you get into it, squeeze everybody. And if you can't get into it, then, say la guerre. So let's look. Oh, anyway, took the long. Risk neutral. Watch. Support. By the way, when this happened, teeth were chattering, Now I get risk neutral. My stop is under here, and it's like, all right. Now here's the choice. This is a consolidation. Let me just show you so you can kind of see what it looks like. Maybe not. Try this again. And the volume is also, there's volume there too. Just throw another one of these in here. So what you got is this is the long, break high, pull back to the volume in here, break high. Now you're outside of this consolidation after testing the volume inside, break high, pull back. This is a long, this is a long, this is a long, however you want to play it. And then you're going for this. Okay? So, and, it's easy, of course. Well, like everything in trading, we don't know what's going to happen. So this is my target here. Now let's come back over here. This is the last area of behavior, I believe. It's right there. That micro high volume structure, which is here. So I'm looking at this and I'm going, this is an outside edge here. That's called a low volume node. This is the high volume node. So I'm thinking here and here. Okay. So that's my trade. And then it's, I don't know, So this is the first, the first long to there, scale, right? Pull back, long. This is resistance because the seller's absorbed here. And we come up here. So I didn't quite get to where I was going, close, no cigar. So I managed the trade, I got taken out of it. Okay. It's right here. Well, this is where I was going, close, right? I saw the seller here. I have this. I blasted out of it in here. That was it. And then I got a stream. So then I'm done. Now I'm going to show you more trades. This, remember, was our target coming down over here. If you get below it, what can you do? Same thing as we've been doing all the time. What is this? Outside edge, too high, right there. This is a short. This is called VPOC migration. So if what you can do with this is also a potential short in the trader lab, okay? Right here. If you come across, now it's mean reversion. This is a context in a context. Trend is down, right? If we come across this, it sets up outside in trading. It's a different trade plan. So what we're referencing is this and this, outside edge. Think of these like, it's called a distribution. And all it is a big consolidation. If you break out of one of these things, and remember, this is important, and then we start doing one of these things. The idea is if we come out here somewhere to sell it, to come back here and to rotate. It's mean reversion. Now we have something called the mean. And the highest volume in the developing time frame is the mean. So this is mean reversion. And the joke in Trader Lab is, yeah, it's mean. So let's look at it. Outside in to here, scale. This is now your resistance. I'm going to put a little line on it. You can see it right there in alignment with this, in alignment with that, in alignment with this. I hope this is useful. I know it'll probably make you nutty, but take it one piece at a time. That's all this is. One piece at a time. If you try to take it all in at one time, it's just going to boggle you. But what I'm doing is I'm just looking at the structure based on the participant behavior. So there's the absorption. The buyers are absorbed. There's my resistance. There's my location. There's my outside edge. It's all right there. There's my seller. Resistance is here and here. Seller. Pullback. Next target, 54. It's a microcomposite low volume node. Where am I? Oh, well, there you are. And if we get under here, just to make things interesting, I don't even know if I have a target. Yeah, down in here. But that's not a recommendation. This could be the outside edge right here. I have no opinion. It's not my job. I can't have an opinion. All I can do is try to get in alignment, and I'm now back current. I hope you got something out of that. This is Trader Lab. I'm going to come up now and look at your questions. Thanks for your patience. Yeah, Systock, I can't talk about my columns right now. All that's in the knowledge base. If you're asking how you do it, they're called cloud notes. If you're interested in the stream in the sense of the market mechanics and how the auction works, that's really what the stream is about. Structured trades, building a business. All these are things I label in here as we go along. That's it. So these are all manual. Every day I update my charts. I create a trade plan. It's not complicated. What's complex is randomness. It's complex. This is not. So This is the retail price. And when you're in mean reversion, it is two-sided trade. So I anticipate, and the word is anticipate, not predict, outside in. So this out here is a low volume area. I'm going to open it up. I'm going to put a little something on the chart here so you could see it. It's approximately there. And what a low volume node is, all it is an outside edge of a consolidation where the volume dries up. Remember the idea that the market gets too high, too low, and then there's retail. Right now, this is right there is the fair price. When the price gets too high, there's less buyers, which is the outside edge. You see how the volume dries up? This is what auction market theory is. It's about, yeah, I'm not paying that. Get out of here. Then it comes down outside and the volume tapers off. You got to be kidding. I'm not paying that. So this is resistance here. I'm sorry. Yeah, resistance, this low volume node here. Let me just mark them for you. And when you cross over one of these things, it kind of, there's separators between distributions or consolidation. So basically this. So outside edge, new consolidation, micro high volume structure right there under here. If I don't, I can test into these, but if I don't gain any traction, I continue lower. So so you know where this one is. You know where the micro high volume is, which is right here. So let's just move forward and see what's going on. Came back to this. So this might be too low. I'm going to mark it. High volume. Now the way this is in multiple time frames or fractals. This is too low. This right now is too high. Retail price in the developing daily time frame. Retail price in the more microstructure. So think of this as support. Think of this as resistance. If I get over here, I come back up and rotate. If I can't get above here, then the buyers and sellers are saying, nah. So this is support. I'm going to mark that high volume node so we can watch it together. And please post your questions as it relates to the topic. And also give a thumb up in YouTube. By the way, the question about the cloud notes and custom notes, that's all in the knowledge base. The bubbles are something, I think mine are set to 35. I don't remember. I got to go take a look here. Yeah, 35. I filter them only because, and they're 3D and it's only delta. So, and I cluster them by price and aggressor. Vertical in pixel aggregate. These are just a couple of things, but 35. And the reason is I used to look at everything, you know, every little hiccup in here. You can go as fine as you want with it. Notice the support. So for me, I don't want to see everything. I want to see the broad strokes. I mean, there's buyers and sellers everywhere, right? But I know right here, there's buyers and there's a seller there. There was a seller here and the buyers absorb the seller. There's a seller here. No buyer here, and the sellers took over. This is retail in the developing time frame. This is retail in this microstructure. This is the dividing line now. So I can look at this, and I know to go lower, I need to get under this. By the way, in the higher time frame, this microcomposite low volume node is the same as this, except it's in a higher time frame. Let me just see if I can. I'm losing my mind here. Where is that? This is the 65, which was our target. 54, 53 is this outside edge of this distribution. So let's see if I got this right, maybe. And what was that again? Roughly 75, okay? Try not to blow everything up, which can happen. Well, 54, I'm in the wrong place. Hold on. Here, right? Did I have that right? 53, 54. So this is a target here. And what you had was 65, which was our primary target. If we get under there, then here is what's called the low volume node. You could see it because where it tapers, that was the outside edge. Now we can either rotate back up, or if we take this out, it puts this on a hit parade, roughly 42. Anyway, hope that's useful. So you can see where these levels are coming out of. This is all based on the auction. So that's 53, 54. I think I got the right level. Let's see. Yeah, here. Okay, that's where that's coming from. So all these, we already know these levels. Now, this is not a strong level. If we get through it, right, then we're looking at this. Okay? And it's not a trade, these are not trade recommendations. These are levels. Levels are not predictive. They are behavioral. And just like you guys look at a high and a low or whatever you look at, right? I look at where participants interacted, and the result of that interaction tells us a perception of value or lack of value. This was the outside edge. And we can come under this. If we come back in, we can then squeeze these shorts. Or we get under here, we can then continue down the levels below. That's what I know. So what else do we know? We know we got support and we had buyers here. This is support. This is retail. And out here is resistance. And what you're seeing is this: outside edge, outside edge, outside edge, outside edge. If we get above here, we can squeeze. If we can't get above here and we get below here, we can either test out, come in, or test and put the helmet on, because we're going to do the Acapulco cliff dive. Not a recommendation, and I don't want to be dramatic, but this puts this down here. And that's a long way to go. It's another 20 points. So statistically speaking, it's probably not high probability. Let's watch the behavior. Support. Notice the behavior. You can see it, can't you? This is auction market theory. And now you know why this is what I do. I don't use indicators. What is the truth of the market? It's not a lagging price-based indicator. It's the interaction between these participants is the market, isn't it? Can you see it? Questions? And please give a thumb up if you're in YouTube. Down at the bottom, please. It's helpful for the stream. How we doing in YouTube? You guys okay? I want to remind you, if you're interested in this process, this is about the business of trading. I understand indicators, been there, done that. I've been trading almost 45 years. I'm not saying there's anything wrong with indicators. I think the problem with indicators is traders never get to learn how the market works. They think it's the indicator, the right mix. Many indicators, more certainty, and not understanding the business they're in. It's not time frames and indicators. It is really market mechanics. How does it work? Why does it do what it does? Why is this too low? Why was this level important from the higher time frame? Is it predictive? No. But if I know about this before the fact, does it give me a heads up to be alert here? That's all I can say about it. It doesn't tell me to get long, though it could be. What it tells me is I'm in a two-sided rotational trade. This, in the higher time frame, was also an outside edge. Think of it in fractals. Remember, Russian dolls. Here, what did we do today? We took out this high. So we took out the weak hands. That's bearish. What about the stops here and the stops here? We didn't do it. If this, then that. If not, then what? Then these are conditional statements as part of what you learn in TraderLab. Then back to here, which was a target. Then under here, get the stops, 65. If under 65, what's next on the hit parade? 54. You get under 54, you're looking at 42 and 26. If not, then possibly mean reversion and come back to 65 and wherever. It's not a recommendation. It's market mechanics. And did we just get to 65? Yeah, we just did. I didn't even notice that. Look where we come. Here. What's this? Outside edge. This is auction market theory. Can you learn to interpret in real time why the market might come here? Why this is important and why that was important. This is the auction. And instead of being consumed with indicators, I might suggest you get consumed with understanding how the market works. Think about what you might do if you understood this. And can you build a trade plan around it? This is what the Trader Lab is about. And there's a link in the bottom of YouTube. And if you've been following this stream, you see me do this now for years. I'm doing the same thing. The outcome of any interaction is always random. It requires trade management, discipline, and knowing where your edge lies. The edge is created by understanding how the market works and where it might show up. And then what do? If I know this is an outside edge and I see these guys absorbed, I see nada, I pull back, micro high volume, this is retail. So, and I'm not saying you should take this trade. You can learn how the market works, then everything has to fit, range and all that. This is the retail price. If this is too high, outside edge, there, location, there, location. It's like real estate. This is retail, so this is still mean reversion. That's the mean. If I can't get below here, I'm going to squeeze. If I come under here, then I'm coming back here, maybe. There. That's it. It's complicated as that. You put a trade on and it doesn't work, you take a stop. Welcome to trading. And by the way, casinos pay the gamblers, right? And if you're in the business of trading, it is overhead and cost of production. Remember what's important. This, and this. So this is basically what a consolidation looks like. Outside edges here. There's also stops up here. So this can pop and still come back here or not. So we'll just see what it does. Questions, guys? And if you're interested in the Trader Lab, if you're visiting in YouTube, thanks for visiting Trader Lab. Trader Lab is a no-cost community of serious traders. This is a no-nonsense environment. It's about career building. And there's a lot of support. The Bookmap supports developing traders. They actually invest in you. We all know you've made a substantial investment, and many of you are paying and experiencing something I coined a phrase for called Trader Groundhog Day. And that is you're doing a process, trying to make it better, yet the results are the same. You get the aha moment, and then you wake up and it's the same thing over and over again. Trader Groundhog Day. I can talk about it because I did it for years. And and then I built trading systems. So, because I used to manage dollars, so they were across a lot of asset classes. So I had to systematize it. And I wanted to remove my emotions. If the computer said buy, sell, and it would place orders and would do all this stuff, it would take me off the hook. And then I would optimize and re-optimize. Well, the term optimization is a nicer analogy, if you will, for curve fitting. And you guys are curve fitting because you're trying to make something better. The thing is, if the premise that underlies it is defective, you're always going to be trying to get certainty out of randomness. The market is randomness. Random inputs and curve fitting is randomness. So one of those has to get removed. We can't remove the randomness from the market, so we have to remove the randomness from ourselves. And that means managing our emotions and only getting involved in the market where you have a statistical edge. You see? Do you think that might help you in your business development? And you will take stops. You will have bad days. You will want to throw a keyboard or monitor out the window. Welcome to trading. When I sat on the trade desk, you'd be surprised what was going on. And what would happen when traders got stubborn or didn't want to take the loss or bailed out of a trade because their emotions were triggered. Does this sound like you? Guess what? It's all of us. We're wired for this. That's why in Trader Lab, psychology, trade plans, structured trades that have a statistical edge. Do you see why this might be a short? Do you see why this might be a target? Just think about it. Does your trade plan allow you to have a market understanding? Not a market predictable. We don't have the magic 8-ball. But what we have in Trader Lab is an understanding of how the market works. That's the differentiator. Not what's the magic indicator. There's loads of magic indicators. I've seen tons of them. I've built my own. I don't use them because they work sometimes. That actually becomes an obstacle to creating longevity in this business, because we can stay on the path of trying to fix a process that might not be in alignment with the business model, which is gaming and edge. Does that make sense, guys? Eric, I don't use any kind of options process or market maker behavior. Um, there are some traders who use gamma, for hedging and all. I don't use any of it. I looked at it years ago. Let's watch this. Remember, too high, we clear this, and we can clear it and pop in, or this is too low. So one of the ways to do this is here to here, or here to here. You see? And what your trade, this is called mean reversion. It's a specific plan. I think, Duzman, are you asking me, how do I anticipate an entry point? Is that right? A trigger? Yeah, okay. This is a trigger. First of all, you got to know the context and condition of the market. This was our target coming down, 65. It's an important level. When we broke below it and checked it, it sets up the short to there, because that's a target in Trader Lab. Then let's come back to what created this, if I can. Try to do this. This here was where the buyers got absorbed and we broke away from it. We broke under here to this target. So this was a short, right? If you retrace here, I'm leaning against this, and the outside edge. So all of these are in alignment now, but I have this volume. That's why I drew this. I don't think the market was there at the time either. So I come up here. I'm coming right to that volume where the absorption happened. This is why order flow is so important. And I have my micro high volume right in there, which is, it's a little hard to see here. Let me see if I can, yeah, I'll show it. You can see it here. This is how Bookmap is so awesome, because I can open all this stuff up. I have to pull this in so you can see it. Where is it? It's over here. So you see this little node right here? It's created this node right there. It's in alignment with this. This is the outside edge of this. So this is an outside in trade. So this is the short. So if you were short here, you're having a wonderful time. If you're not short, this is your level. And then if it never comes back here, there's nothing to do. So now let's look. I come back and test it. It was too high. This is a trigger. Now let's look at it. So now I come up here. Here's my buyer going to the moon, Alice. I am under this location, and this is my outside edge. So this is the area. So I've got this and I've got this. So for me, if I take a short here, my stop's got to be over here, It's still only a couple of points. Looks like it's massive, but it's not. Suppose I didn't get short here. What do I have here? Look there. Micro high volume structure. Let me. There. Now this is nuanced, and it takes. You're not getting. Nobody is going to get this like, oh, I'm going to look at this and then I'm going to start trading like this. No, it's a broad stroke. You start in a higher time frame, but you need to understand what this means. This is not based on any indicator. It's based on the participants. Because ultimately, what is the market made out of? Participants, right? The interaction of these participants is what establishes something called value. The purpose of the market is to determine value. What's too high? What's too low? Maybe. And what's retail? Right now it's there. So if I come outside, I can come here, I can come back here, and I can do this. If I break away from it, then I can go down. So this is the short. So this is the trigger. There's your seller. Here was your absorption. Okay? This is location, real estate. So you got a short here. Does this help you? Can you see this? Thumb up in YouTube, guys, if you are finding this interesting, down in the bottom there. And remember, there's an open invitation to visit the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. There's no cost to join the community. It's serious community, though. It's about building a career in trading. It's not Fantasy Island. And there's no holy grail. So this is the short. And remember, to here or to here, it's up to you. And this now is key. Okay? And that was our, so your target could be here, at least for a scale, and then now you're trailing. And now remember what the next part is. If we come back inside, back here. If we don't come back inside, here. Not a trade recommendation. Can do anything. Does that answer your question on trigger? Guys, thumb up in YouTube. That's all I'm asking. And you're invited to the Bookmap Discord Trader Lab community. I'm going to show you, while we're waiting on this thing, because you know what the targets are, and these are not trade recommendations here. And if we come back inside, then potentially this, not a trade recommendation. You know, like everything, what I do and what I share in Trader Lab is we can't predict anything. So let's forget that. What we can do, though, is understand market mechanics and then potential alignment. It's the information that we get from the participants is what helps us. And we all take stops. By the way, do the casinos lose money? They pay to gamblers, don't they? Well, so do we. And how does a business experience that? Overhead and cost of production. How do we experience it? Personal failure. Oh. Or hindsight. I knew it was going to do that. No, you don't. So let's remove all that. That's just ego. And you see, if you're FOMOing in, it's all the emotional triggers. There's absorption there. By the way, look what you have. Microstructure. Remember, too high. This is key. I'm under here. Now, if I don't come back in or I just check, right now, we're heading south of the border. Remember the 65, right? Target coming down, took a long, pretty much did its thing, break below, sets up the short, retracement to it, sets up the shorts. Here, this is all structured trading in Trader Lab. Get below here, continuation, get below here, get your helmet out, be prepared to go to ground. Target, not recommendations. This is Trader Lab, guys. And by the way, in Trader Lab, if you haven't seen these, there's 60 PDFs of these that you can download, reverse engineer. And this is some of what I'm showing you here. These are structured trades. And And these are live, actual trades and research and stuff. I work with developers at Bookmap, giving them ideas and different things. And, you get an idea just like everything you get, and then you throw it away. Here's a long targets. They are actual trades. Anyway, there's a lot of this. There's 60 of these. Order flow phenomena. You can take a look at this stuff. It's all no cost. And there's a library of webinars that you can watch in Trader Lab. This one, I don't know if I'll make this one available. There's a lot of them, but in fact, Friday's webinar is now public. It is called Volume Profile plus Order Flow and Trade Triggers Revealed. You might want to look at that one. And they start with the primer webinar. That one gives you a high-level overview of what this is all about. Tells you a little bit about me, but what's more important is not me, it is process. Why does the market do this? Why do most retail traders fail? Why is it such a high failure rate? By the way, what's this? Get my brain back in alignment. What's this? High volume. Let's just look. These are not trade recommendations. You got volume there. Whoops. And you got volume here. So you can kind of see this. I'm going to draw one other little thing for you just to keep you from falling asleep. This is an outside edge. This is an outside edge of a consolidation. You could kind of see where the bottom of this consolidation is. So what you have here is the chop, chop, chop. In the chop is the volume. This is the outside edge. Right here, nada. Buyer was absorbed here. There's a seller here. I see nothing. I have my buyer here. We can't take this out. We break. This is another short or a trade management opportunity. We break low. Buyers were here. They got run over. Thanks for playing. We'll send you a coupon to the buffet. But let's watch. See? Is everybody tracking? And here's the other part with the order flow. The buyers are here. The breakout is here. The volume is there. So if I get short on these, and this is what's important right here. That's what, when I'm looking at order flow, I'm looking at this because the buyers absorbed and there was more selling pressure than the buyers couldn't hold it here. And don't forget what I'm below. I'm below this. So this sets up another potential short. Now let's go back into trigger world. Trigger. So let's look. Too high. Too high. Sellers are still here. This guy is under the bus. Remember this. I have resistance. I now watch. Now, I'm not saying this is actionable for you. I'm saying is you can learn to read it. Here's my buyer. Buy stops. Who knows? No buyer up here. This is resistance. Right here is resistance in this structure up above. Seller, potential short stop is here, and we're going somewhere, wherever it is. And I don't know where we're going. It's not my job. So let's look. I got 1 minute left. Remember, there's a link in the bottom of YouTube if you're interested in becoming part of the Trader Lab community. There's no cost. This is trading auction market theory using a volume profile as a chassis with structured trades. You can come to Trader Lab, download those 60 PDFs, access the library, and go from there. It's a professional community. I got to tell you, there's no secret sauce. Trading is random. You need to think of this kind of like gaming, like the casinos do. Everybody takes stops. Everybody has losing days. It's just the business. The casinos pay the gamblers. It's overhead and costs of production. I understand the emotional component. You can learn more about that in Trader Lab. Thumb up on the way out, please. Appreciate you guys coming by and visiting the Trader Lab today. Be sure to visit the Trader Lab if you're not getting the results you're looking for. While past performance is never indicative of future results, come to Trader Lab, ask the participants in the Trader Lab how this process and being part of this community has impacted their development. Many have gone on to other things in the sense of funded programs, etc., and other things. And maybe you can too. So thanks again, guys. Have a terrific day. Please give the thumb up in YouTube on the way out. And remember, this stream is available exclusively to Bookmap Discord Trader Lab participants to reverse engineer and to build on their success. Thanks again. Look forward to seeing you tomorrow.